Are you looking for a way to add steady, reliable income to your investments here in Canada? Well, Covered Call ETFs might be the perfect tool, and today we are going to take a closer look at Global X's Canadian lineup of Covered Call ETFs, which offers a great way to generate consistent cash flow even when the market isn't moving much. In this video, we're going to talk about how covered calls work, and then we're going to dive into 6 specific Global X ETFs, each offering a unique way to earn income from Canada's core industries, from big banks to energy and even gold producers. Stick around, and by the end, you'll know exactly how each ETF works and which one might be the best fit in your portfolio. Now let's start with the basics of a covered call strategy. A covered call involves 2 main steps. First, you need to hold an asset, such as shares of stock or a collection of stocks like an index or sector ETF. Think of this as the core of your investment. The second step then is you need to sell call options on these holdings. Selling a call option means giving someone else the right to buy your shares at a set price known as the strike price by a specific date. In exchange for this, you receive an upfront cash payment called the premium. The premium collected through these call options provides income regardless of how the underlying stock is performing. However, if the stock price rises above the strike price, your gains are capped because you might have to sell the stock or the underlying ETF at that predetermined price, the strike price. This trade-off is what makes covered calls ideal for generating consistent income, especially in markets that aren't moving aggressively upwards. With Global X's covered call ETFs, fund managers handle all of the buying and selling of the options, so you don't need to manage it yourself. Now, let's take a few minutes and explore some of Global X's Canadian covered call ETFs and see how each fund works to generate that steady income. Global X Canada offers a range of covered call ETFs, each focused on different sectors and indices. Whether you're interested in Canada's leading banks, the energy sector, or even gold, there's likely an option that fits your income needs. Now let's dive into 6 different covered call ETFs from Global X that Canadian investors could consider. First up, we have the Global X S&P TSX 60 Covered Call ETF, ticker symbol CNCC. This ETF provides exposure to the S&P and the TSX 60, which represents 60 of the largest companies in Canada. CNCC offers the broad stability of Canada's large cap market, covering various sectors from finance to energy and beyond. By writing call options on this portfolio, CNCC generates additional income, which can be especially useful in steady or slightly up and down markets. This fund is for those that are seeking income from Canada's largest companies, offering exposure to the top Canadian names with the added benefit of the covered call premiums that generate you income. Now, next, I want to talk about CNCL. This is the Global X Enhanced S&P TSX 60 Covered Call ETF. Just like CNCC, it also tracks the S&P TSX 60 index, but it adds a twist: light leverage. This means that it uses about 125% of the value of the portfolio to slightly amplify returns while still employing a covered call strategy to generate income. With this ETF, you get the same exposure to Canada's large cap companies, but with potentially higher returns and higher risk due to the leverage. CNCL is for investors that are looking for a bit more income and growth from the same large cap segment. Now, third here, let's talk about BKCC, the Global X Equal Weight Canadian Bank Covered Call ETF. This fund specifically focuses on Canada's major banks, one of the most stable sectors in the Canadian market. BKCC holds an equal weighted portfolio of Canadian banks such as RBC, TD, and Scotiabank. By using an equal weight approach, it provides balanced exposure across Canada's big 6 banks rather than overemphasizing on just the largest one. With its covered call strategy, BKCC generates income from the call premiums on top of the dividends already provided by these bank stocks. If you're interested in steady cash flow from Canada's financial sector, BKCC is definitely worth considering. Now, moving on to number 4, we have ENCC, the Global X Canadian Oil and Gas Equity Covered Call ETF. This ETF gives you exposure to Canada's energy sector by investing in major Canadian oil and gas companies. With companies like Suncor and Canadian Natural Resources, ENCC offers access to one of Canada's most influential industries. This fund's covered call strategy provides additional income which can help smooth out the volatility that often comes with the energy sector, especially here in Canada. ENCC is a strong choice for those that want income and exposure to Canadian energy without the roller coaster of holding individual stocks. Now, next up at number 5, let's take a look at GLCC. This is the Global X Gold Producer Equity Covered Call ETF. This fund invests in gold mining companies providing exposure to North American listed gold producers. If you're interested in precious metals, but you want an income component to go with it, GLCC offers an opportunity to invest in gold while earning income through the covered call options. Now, in general, gold can be a pretty volatile asset, and so having income through the option premiums can help balance out the highs and lows of the gold market. For investors looking for exposure to gold with the added income, GLCC might be a perfect fit. Now, last but definitely not least, let's talk about USCC.U. This is the Global X S&P 500 Covered Call ETF. This fund provides exposure to US large cap stocks, giving Canadian investors access to some of the largest and most established companies in the United States stock market. Employing a covered call strategy, USCC.U generates income from option premiums on US stocks, making it an attractive option for Canadians that are seeking international exposure and diversification while prioritizing income. Now, because USCC.U is US focused, it enables Canadians to earn income from some of the biggest names in the American market, all without the need to manage the currency exchange or options trading on their own. So, who are these ETFs for? Well, covered call ETFs can be a good fit for income-focused investors, particularly those nearly or in retirement who seek steady cash flow without the complexity of managing options directly. Each ETF offers exposure to key sectors in Canada or, in the case of USCC.U, the US large cap market. Now, if you're looking for diversified large cap exposure here in Canada, CNCC and CNCL could be good options, with CNCL offering added growth potential through the light leverage. For those prioritizing stability within Canada's financial sector, BKCC may be a strong choice, offering steady income from Canadian banks. And if you want exposure to Canada's energy sector combined with income stability, ENCC could be a great fit. Gold enthusiasts seeking additional income can find a balanced approach from GLCC, blending gold investments with an income component. And finally, in summary, if you're looking to diversify into US large cap stocks, USCC.U offers an easy income-focused solution designed specifically for Canadian investors. Now, Global X offers a diverse suite of Canadian covered call ETFs designed to meet different income needs across various sectors. Whether you're looking for income from Canadian banks, energy, gold, or US large cap stocks, these ETFs provide a convenient, hands-off way to incorporate a covered call strategy into your portfolio. So if you're looking to boost cash flow in your portfolio or you want more stability in your returns, these covered call ETFs from Global X Canada are worth considering. I will put a direct link in the description of this video to all of the ETFs that I have talked about. Thank you so much for watching, and if you found this helpful, make sure to subscribe to the channel. I sincerely appreciate it, and more content on investing strategies and unique financial tools are coming your way, so we'll see you in the next video. Talk to you later.